Welcome to this week's office hours, whether you're attending live or watching the replay. I'm glad you guys are here. We do this every single Wednesday at 12 p.m. Central, 1 p.m. market time. The whole goal is to understand what's working right now and how to be best prepared. And so we do that by talking about the market, we do that by talking about bots, and we do that by answering questions. And so I'm glad you guys are here. Again, this is for the Oat Unlimited Coaching program. So this is for anyone who has an unlimited membership. They are part of our Inner Circle coaching program. Let me dive into the first part, which is the market overview. So when we're looking at the market, we assess the market not based on guessing, not based on hoping or wondering or drawing lines that no one else could repeat. Instead, we use math, and that is known as our market analysis indicator that uses the 200-day moving average as the middle line, a 2 standard deviation move on these right here, and 4 standard deviation moves here, which all that math mumbo jumbo tells us the current trend. We are above the 200-day moving average and within the first band. This is an uptrend. This is where the market spends 80% of its trading. If we're below it, we're downtrend. And if we look at it, essentially the market trend is bullish. We are within this green zone. This is where the market spends 80% of its time. The market typically has a good 2-year trend when it's inside of this zone. Right now, we're coming up on a year of being in this zone, which means we have about another year left of a solid bullish trend. And at least that's how I'm playing it. So I'm still playing that we are bullish because we always trade with the trend, never against it, no matter how we feel. If we're scared, if we're a little doubting the trend, that's okay. You can put on some hedges, but always go in the direction of the trend and have that be where most of your money is positioned in the market. And so my thought is that we are bullish. We're looking at ES. We're looking for a break above 70.50, which is the high that I formed here when it started accumulating around this range. We dipped down. We've had a green day for the last like 5 days in a row, which has been very nice. Today, we're having a bit of a red day, but the goal is to break above 70.50. If we can do that, we're going to continuously trend higher. And then we're also looking for the low of 6,800, which was this support level right here. From a bots overview perspective, on the top bots of this month so far, which again this week ends this month. So these bots, unless something happens, will probably be the top bots of the month, which is the ES Strangle bot, a biweekly rainmaker that is inside of our public bots. You can go check that out there. It's essentially just a strangle that is skewed for the market, meaning you're doing a 10 delta put and a 5 delta call. So you're giving your more room to the upside since the market in general trends higher and you want to account for that. That's an ES Strangle bot. You have a GC 30 DTE put credit spread, and the same thing there. Basically, these two are coaching clients, part of the Oat Unlimited program. And one person, I believe it's Key Car, was the original creator of this. And then they copied it as well as a few of our other coaching clients also, with Rick making his own put spread. He has a gold version as well. That's what you can see there. If you're wondering, my thoughts are still the exact same. When you're building out your options bot portfolio, keep it as simple as possible. I've been looking at a lot of accounts recently, and they have 4, 5, 6, upwards of 10 bots on a single broker account. Guys, you don't want to do that. Keep it as simple and as streamlined as possible, which looks like having a solid bullish bot and a solid bearish bot. Those almost always rank you in the highest leaderboard. When you put all your money into one bullish and all your money into one bearish, that's how you have success. You keep it simple, you keep it clean, and you just let the bots work. Now, once you exceed $150,000 in your portfolio, you can add another bot. That looks like adding something like a sideways bot, which would be the biweekly rainmaker, the ES Strangle, or you can diversify, which means GC or CL, being crude oil or gold, some manner like that. Both of those will do very well also. So that is what we're looking at. That's what we're doing. Always have a bullish bot, always have a bearish bot. If you have more than 150, you can consider adding more, but be very diligent about it. You don't want to add more for the sake of adding more. There has to be a particular reason, whether you want to take advantage of the sideways markets or you want more exposure to metals or whatever it is. Now we're going to go to the live Q&A portion, which I get to your questions because this is the office hour calls. And so I'm here to help you out with whatever you want help out with. Let's see, who do we have here? Now I'm bringing back up the chat in the Zoom. We have Bobby, Dale, Robert, and Scott. Glad you guys are here. How can I help you guys out? I did come down. My wife and I sadly got COVID over the weekend, so I'm still in the recovery in case my voice sounds like I'm a different person. Sorry about that. Also, I told you I would look into converting this to a meeting so that you guys can turn your mics on. If you want to turn your mic on, just give me a thumbs up or something and I can manually do that. I didn't get a chance to do that before we hopped on. Anyways, how can I help you guys out? You can see right here that was doing well. Oh, look, I'm still up about 800, not bad. This is the bots that just started running 2 weeks ago for me. I have the futures put credit spread bot. I have the futures bullish bot. And so, yeah, if we do about 800 a week, that shouldn't be too bad. That's a goal. We'll see. Been a little red the last day, taking us out. I think we're up near 1,000 at the high, which was pretty nice. But again, just a futures bullish bot, futures put credit spread bot, and then bearish bot. And so, yeah, that's literally all I'm running for this one. Any other? I don't know. Seeing any chats. Make sure to put it in the chat room if there's a question. Okay, Scott says, is it okay to run futures bullish every 2 weeks? And the futures put, yeah, for sure. So you just break it down as you do for anything. Which again, if we draw that out, let's say we have $100,000 account. How do we allocate funds? We start off with doing a 30, 40, 50. So we determine your risk tolerance level. If you have low risk, do 30%. If you're moderate risk, use 40%. If you're high risk of the account, you use 50%. I'm going to assume with 100K, you're okay with moderate to high risk. So I'll just go with moderate just to be average. So if you want moderate risk, that means a 40% allocation, which means that of the 100K, 40,000 of it is going to be put into trades. So of the 40,000, how we're going to split this up? You're asking, can I do a futures bullish and a put credit spread? So a futures bullish, if we're doing 2 a month like I'm doing, that means we're going to have 2 trades open at a time. And with that said, that's going to be about 8,000 a piece. So of the 40,000, this will take up about 16,000. So then if that's what the futures bullish spot is going to take, so I'm just going to say FB futures bullish spot is going to take, then we just get the remainder, which was what, 34? No, that's not right. 24K. And that will go inside of our put credit spread bot. 24K is plenty each, at least the way that I run them. So if you're getting the put credit spread from my options bot portfolio inside of the options auto trader, then that means that each one of those takes 3,000. Takes 3,500 roughly. Let's just say 4,000 per trade for easy numbers, which means that you could have 6 trades open at a time for this one. So you have 2 trades here, 6 trades here. This should get you to close to, not exactly, 2,000 a month. And this one right here will get you close to, it's about, I think it's 200 a piece, doing 6. That's about 1,200. Yeah. Okay, sorry. I noticed the margin requirements are higher in retirement account. I need 14K for one. Okay, sorry, I didn't realize they were in a IRA account. Yeah. So if you're doing it in a retirement account, this is what a normal broker looks like. If you're doing it in a retirement account, you need to do it a little differently. If the retirement account does allow you to do a 112, or if you just bullish bought a 111, which a lot don't, but if they do, it's going to be more like 14,000 per piece. So then if you do 2 trades, it means 28,000 will be put here, which means that the remainder 22,000, no, 12,000 will go here. So you have 28,000 that gets allocated to this one, 12,000 that gets allocated here. And that'd be one way to do it. Another way is if you look inside of the options auto trader, we do have a defined risk version, which makes it very retirement account friendly. So underneath public bots, we see here defined risk, ready, steady, retire. So that's basically what the futures bullish bot is. You do the defined risk version. That way, it's retirement account safety because you're not leaving yourself up to undefined, which would bring your buying power down on this one down to 3,000 or something, which would be a way lower. I could be wrong. It might be 4 or 5,000, but still way lower than, what did you say, 14,000 per bot. Keep that in mind when running, is that you can always do a defined risk version, but that's how you would split it up for that. Dale says, can you explain the VIX spike bot a little more? Sure. So when we are selling options, particularly in this market that we're in, our one of our biggest risk is volatility. And what does that mean? As an option seller, you're actually short volatility, which means you want volatility to decrease. If volatility increases, you're gonna see some losses. So if we look at VIX, let me remove this indicator so you can see it more clearly. VIX in general stays pretty low, but when it spikes, it goes up really high, really fast, which is where that pain comes in for us as an option seller. So what we can do is we can notice, wow, when it spikes. So for instance, here, it went up over 26% in a single day, considering where it started and where it ended, right? It's a 26% move in a single day. Now we can also look at here, 15% move in a single day. Oops, didn't mean to do that. You can see here, this move when it spiked up, it was 31%. This move, 22%. So we can look at if it moves a lot, we are going to have losses. So is there some way we can hijack this move or jump into it to give us some protection? And so one of the best ways to do that, sorry, is to jump in with a VIX bot. Now, it's not something that I'm running on my bots. As you can see, I have a long-term bullish strategy, a long-term bearish strategy. Those will complement each other well. But if you want something to address the immediate volatility spikes, you can use the VIX bot where, hey, once VIX moves up more than 10%, intraday in one single day, right? VIX is greater than or equal to 10% move in a single day, then you can simply just buy a put, right? Why is this? Because if the market spikes up 10%, and typically you do this by the lunch session or the morning sessions, that shows a lot of day left. That this says lunch or morning session, basically in the morning portion of the day, which means there's still day left. You get in at the 10% marks. Let's say here you ride it up and you can take the put profit there because puts that go up in value can easily double, triple, quadruple in value. And so buying a put gives you a way to buy a cheap asset that could potentially appreciate a lot due to volatility. And so that's one way to give yourself a bit of a hedge in the middle of the day instead of using a long-term strategy where you have to wait for the trend to fully reverse to start getting some protection. Now, I'm not using it, but it is there as a popular option. I know a lot of our members are using it. I hope that answers your question. Okay, Dale says, what about trading a VIX ETF or VIX futures directly instead of an SPS asset? Yeah, not all the brokers support it. So it wasn't something that was originally supported in the options auto trader, but it is something that I'm looking into after adding brokers. Right now, my priority is adding more brokers. I have E-Trade's approval. I have Moo's approval, which if you're not familiar with them, they're going to be more of an international. They support things like Singapore, Canada, China, all that stuff. Those brokers are coming first. And then it's top on my list to look into adding things like VIX that you can actually create an asset on that, or for instance, buy a call option on VIX, which to be more direct. Robert says, thanks for the account review this week. Of course, I went through every bot setting on all my bots. When you have a chance, I'd like you to have a look at a couple of the settings where I have questions for sure. All right, Robert, I just gave you permission to talk. Feel free to turn your mic on and ask whatever question you have questions about, or I can just review it on my own. I didn't know if you had those questions listed out.
Oh, yeah, thanks. I have a couple. I actually made a little notepad. I don't want to take away from time you have with everybody else, but it's more specific on specific bots.
Yeah, go for it.
Yeah. The GC and the CL bot, I don't have any stop loss settings on there.
Yeah. So typically when you're running a put credit spread bot, you don't have a stop loss because it's already built into the trade. You define the risk of the spread, and that's where the stop amount is. And
Okay.
you just have a take profit and you close it early.
Okay, got it. Okay, so the take profit is the 50% and the spread is the risk on the trade.
Yeah.
Okay. I just want to make sure I didn't leave it out. And also, I noticed that the 111 originally, let's see, originally there was a out of the money strike of 25 points. And then the new 111, at least when we went over, had instead of a go out 25, do a delta of 23. It's that correct?
Yes. It really just depends on how much of a hedge that you want in the trade. So the 111 is obviously you're selling a put for income and then you're putting on a put debit spread for protection. And
Right.
25-23 delta is a very standard way of doing it. That's the way that I originally put on the trade when I was trading them by hand a couple of years ago. But you can also define the width, and that tells you how big of a hedge or downside protection that you have. And so sometimes you want to decrease that hedge so that you have more profit. And so that's what setting it at 25 does. It gives you less of a downside protection hedge, but allows you to make more.
Okay. But
So
the
it
new, the
really
new
just depends
current
on how
one.
you want to run it.
Okay, the current one though, you have going out Delta 20 and then Delta 23, I think.
Yeah. Yeah.
Yeah.
That's like standard. That's yeah.
Okay. And I guess one final question, because I think I may have typed in going over, may have made a mistake. The stop loss is on the new 111, is it 200% or 300%?
Depends on where you want to ride it. I'd like to be around a 200%, or at least that's what mine's set at this year.
Okay.
Yeah.
Okay.
Yeah.
Okay, good. Okay. Those are all the questions I had. I really appreciate it. Thanks.
Yeah. Awesome. Sweet. Any other questions? Good questions so far. Yep. So if we look at the overall market, we're still in that bullish trend. And so that's why we want to align all our stuff. And that's why I always said, make sure your bots are aligned with the market. I know I don't need to tell you guys on here already know that, but it aligning it with the market just saves you a lot of headache. I just say that because I've been like reviewing a lot of accounts recently and bots aren't aligned with the market. And so I'm like, oh man, that's just not going to go well. So it changes anyways. Yeah. Most of you guys, if you're using the bots directly from our options bot portfolio, you're saved from this issue by default because we use the bot types. Like we set the bot to, we designate it as a bullish bot or designate it as a bearish bot. And by doing that, it only enters the trade during these phases. So it'll only enter during a bullish, only enter during a bearish if it's a bearish bot, etc. So most of you guys are good there. Just for anyone who watches the replay. Yep. Let's see. Any other questions? Oh, all right. Okay. Dale says, what's your plan for rolling out 0DTE data on the back tester? The back tester, the first goal of it is to get all the entry settings that the options auto trader has so that you can fully back test out a bot there. And so what I mean by that is my first priority is having all the settings that you can set inside of Oat being like rolling. So you have rolling settings in there. So if you have a bot that includes rolling, it handles that correctly. It has all the ways to pick a strike price, which I think we're pretty close to right now, all the entry rules and all the exit rules. And then once I do that, then I'll start moving to supporting different assets because SLV is top on that list. I need to start that data download soon, hopefully. And then, yeah, and then 0DTE data, which I hope to get soon. So yeah, it's definitely something on the list, Dale. I don't have a exact time frame for it, but it's on there. Scott says I don't have any for you today. Thank you. No worries. Glad you're able to show up. Hope you learned something. It's always fun talking. Dale says thanks. Awesome. Sweet. If there's no more questions, thank you guys. I'm going to go drink some tea, but I hope you guys enjoy the rest of your week. As always, if you have any questions, Discord right here inside of Vote Inner Circle main, I'll answer everything I can directly from here as quickly as I can. I also have access to all the trainings here on onboarding, all the training libraries as well, in case there's any questions. And we do our weekly Q&A here, which you already know because you're here. Anyways, thank you guys so much for being a part of it. Thank you for asking questions. It's always fun to have you guys here, and I will see you guys next week, hopefully in better health. All right, bye guys.